Good morning, guys. How are you guys doing? Can you hear me? Okay, can you unmute yourself a bit? Okay, can you guys hear me? I just want to know if you guys can hear me. You can unmute yourself. Can you guys hear me?
Yes, we can.
Hello?
Yes, we can hear you.
Yeah, we can hear you. Good morning.
Okay, so we are going to be doing top-down analysis on gold today. So we know the direction of price and where we can trade from, and take our next trade from. So let's go to the higher time frame. Let's go to the daily time frame. So basically this is an uptrend. This is a clear uptrend. So the rules of structure is when markets keep breaking structure to the upside, then we are in an uptrend. So it's like this. So you guys know we have a low here and then we have a high here. So a market goes upward, take out this high. Now market has given us the higher high. Now we have a break of structure to the upside here. We have a new higher high here. So because we have a break of structure here, we have an order block here. It doesn't matter how you call it, order block, point of interest, but this is a demand zone here. So when market, the rules say that markets have to come all the way. Sorry, let me get to again. Markets have to come all the way here, before it can give us another higher high if we are having an uptrend. Okay, so let's the market come here. So it sometimes, because we have now, this is an external structure. So sometimes market will come to your external order block here, mitigate it before giving us a new higher high. And then sometimes market will give us something like this. Market will first give us we have internal structure and then we have external structure. The external structure just giving us the direction of where price goes, but the internal structure is, refining our entry, where to take our trade from, strategically. So, price came all the way here to mitigate another block here, moving here. So sometimes, when price give us internal structure, something like this, now we have a low here, give us another high, we have a low here to this point. Let me change this color to black. Okay, so in a situation like this, market can literally come here, mitigate our internal order block here before giving us a new higher high. But before, so imagine if you are the kind of trader now that want to trade just external structure, right? You might not catch your trade from here. This will be a missed trade opportunity, right? Because we're expecting price to come here. But you can still adapt to the market. There is a way you can still catch your trade from here. You missed this entry, fine. Market will still give us an internal opportunity here, an internal structure here that suggests that, okay, market has reversed. That is an internal change of character. So you will likely see something like this. Okay, move, give us this low here, break above this high, give us an internal higher high, then the market will come, mitigate our internal order block again before moving this direction. But because this is an internal structure, you keep seeing things like this. Okay, you keep seeing things like this. But on the higher time frame, you will not. It's not even might. You will not see all of these structures. Pardon my structure, like you will not see all of these things when you are on the external time frame. You cannot say 15-minute structure on the daily time frame. So the daily time frame, you can only see the directional bias. So the first thing you do as a trader is to come to your higher time frame. You can go as high as the weekly. You can go as high as the weekly. Literally, the weekly suggests that we are like extremely bullish. So in a bullish market, you want to follow institutional footprint in the market. So the reason why it's very, very important to trade with smart money is because it deals with structure. So you are literally not guessing in the market. You are trading a system. You are trading with a system in the market, reputable, profitable system in the market. So you are actually a retail trader because your money cannot move the market. Your money cannot even create the tiniest candle in the financial market. So we have to trade with the institutional traders that have the power to move the market, the big players in the market, the hedge funds, banks, we have to trade with them. So our work, the only work we have as a trader is to identify their footprint in the market and trade with them. Shikena, that's the only thing we need to do. Identify their footprint and trade with them. So how do you identify their footprint? You need to know where this chart as a whole is going. What is it telling you? That is where you come to your higher time frame to know exactly where the chart is going. Okay, this chart is bullish. That means we have buyers in the market now pushing price to the upside. I need to trade with the buyers. You don't want to trade against them. I think trading is the only time you should follow the crowd. You have to follow the crowd and trade with the crowd. So after you have determined your directional bias, you have known your directional bias in the market, the next thing to do now is to identify your market shift. So literally understanding your directional bias has to do with market shift. If this is a bearish order block, if this is a bearish market now, let's say this is a bearish market. If this is the bearish market now, this is the structure of a bearish market. See, we are having break of structure to the downside. Okay, break of structure to the downside. Structure to the downside. So if you want to change the chart, you can click auto plus high. You hold auto down, then you click high, and it change. So because we are bullish now, this is our market shift to the upside. Okay, so now we need to refine our entry. We know we are bullish now. We are trading with the buyers. Okay, so now we need to understand because we are bullish doesn't mean we don't have pullbacks. We do have pullbacks because let me draw a better structure for you guys now. So because the structure is like this. Sorry. Because the structure is like this. We have this low here, this high. We have a higher low here. Market go up, giving us the higher high. Market coming down again to mitigate another block. Moving up, give us another higher high. Giving us another higher high. Sometimes we have a retest, right? That is when we have a breakers block, then we have a retest, then giving us another higher high like that. So this is an uptrend. So you don't want to be caught up with the pullbacks. So you have to trade with structure. You see, when market, you don't want to be trading buying from here. So when market gets to this high, Let me see the brush. Okay. So when market gets here, you don't want to be buying from here. You want to follow price down. Okay. You want to follow price down so you can sell from here. You can sell to this place and then you buy from here. When market gets here, you have no business buying from here, even though it's an uptrend. Okay, the structure will suggest to you, you sell high, will tell you, okay, this is a bearish order block here. We have a bearish order block here, so this is a supply level here. So you have to follow the footprint of institutional trader again to push this price downward here, mitigate your order block, and then you continue. Okay, so this is how it works. Oh, sorry. So because we are selling, we are buying here. This is a bullish market. Now we need to understand all the way here we have all the way here market. This is the all-time high. Then that high created this low here. So we have a low here, and then you can see moving all the way here. We have this high. Market gave us this high here, and then push down again to give us this low, and then move all the way up again. So here you can see we have a market shift here. So you have to take your trade from where you have your market shift. That is the rule. Repeatable strategy that I've been working. So this is a break of structure here. So break of structure to the upside. So this break of structure, we have a low here. Remember, we are buying low and we are selling high. Okay. So because of this low here, let me change the color of this thing to blue or something. Good. Because of this low here, on the higher time frame, this is our order block here. This is our order block here on the higher time frame. Can you see clearly? This is an interactive class, so this is an interactive. Let me know if you guys are confused or you have questions so far from what we are discussing. Can you guys hear me? Hello? Please, you can unmute yourself.
Yes, I can hear you.
Okay. Are you guys understanding so far?
Yeah, I'm understanding.
Hello? Okay, cool. So here we have our order block here on the daily time frame. So this is a huge candle on the daily time frame here. You and I know we are retail traders. Yes, our risk management is very, very important, and risk to reward ratio too. So I cannot, if I'm taking my trade on the daily time frame here, I'm risking a lot, and I don't want that. I want to be able to be calculative. I want to be able to manage my risk as possible as I can to protect my capital. Like the number one goal is protecting my capital. So this is the order block here on the daily time frame. So this is not a demand level. This is a demand zone. So if price gets into this level, if price push down from here and get into this level, you might decide to mitigate here and move all the way up, or you might decide to come here and move all the way up. But in all of these things, always make sure you have a confirmation to buy at that particular time. So we have this on the daily time frame. Now let's go lower to 4 hours. Let's see what we have there. So you can see this is 4 hours. So our order block have to align with the daily demand zone. Okay. So this is, let me label it. This is our daily demand zone. So our order block have to align with the daily demand zone here. So you can see even here we have an internal break of structure here to the upside. This is an internal break of structure. To the upside here. So you can see the alignment between the daily and the 4 hours. If we go as low as 15 minutes, can still see the same alignment. We just need to refine our entry now. So I'm going to be taking my order block from the candle that caused this break of structure. The candle that caused this break of structure, this is my candle on 4 hours now. This is the candle that caused this break of structure. So that is my order block. That is where I'm taking my order block from. Okay, let's change the color of this thing. Okay, good. So this is my order block here on 4 hours. This is my order block. If we are marking the structure on 4 hours now, sorry. If we are marking this structure on 4 hours, let me take this pattern. So we have this high here, and then all the way here we have this low here. You can see we have this low here. Then we have a high here. I'm going to mark this because you can see we have this bearish candle here. That means you have a low here. But based on this high on this 4 hours, let me take this as my high. Then I have a low here. You can see I have a low here, then here, all the way here. So let's still refine down to another a lower time frame. Like let's go to 2 hours and see. You can see this is 2 hours. This is the low I refuse to mark on 4 hours. So you can see we have a low here, and then we have a little market shift here on 2 hours. So we have literally a little break of structure here. 2 hours. So this is an internal low here. This is an internal low here. You can see how the 4 hours order block is still here, and then on the 2 hours we still have this low here as well. Let's go to 1 hour and see what is going on. So this is 1 hour. And then, okay, somebody say, what about these ones, right? So we have this low here. We have a high here, and then we have a low here. So price came down to mitigate this low already. And then move all the way, came down to mitigate this low as well. Move, created another high, mitigate, came down to mitigate this low again. Move upward, created this low, came down to mitigate this low again, and high, low, price came down to mitigate this low before moving all the way up to the upside. So this is an internal structure, so it's not looking fine, it's looking ugly, but the goal is for us to understand. So here has already been mitigated. See, price has come to mitigate this. Price also mitigated this, and then this huge wick here came to mitigate all of these things here. But price has not come to mitigate price has not come to mitigate this yet, neither here. So when price comes to mitigate this other block here will serve as our liquidity. Okay, here will serve as our liquidity. So now our focus is in this bracket here. We are expecting price to come here. Then we'll watch the reaction. Let me go to 2 hours. So when price gets into this zone, we'll want to see something like this. I want to see something like this.
Yeah.
I want to see something like this. This is a change of character here. Price coming down to mitigate our other block here, then moving upward. Or we can wait for an extra confirmation. Before moving up here. So that means we have a change of character here coming to mitigate. We have a break of structure here. Price came down to mitigate before moving upward. So we want to see a change of character. I want to see this as a change of character. We also want to see a break of structure. We are waiting for extra confirmation before we buy from this level. So we would still want to market to come to this level before we buy from here. Let's see. Market is dumping a bit now, and we have a break of structure to the downside here, and then we have another block here. Market reacted off of this other block to sold into the zone and then start moving up again. So this is my own bias on gold. This is what I'm expecting to happen before I buy the external structure on gold. This is, people will be like, when will price get here today? It's going to take time. Like, really? You see the volatility on gold? So, yeah. Okay. But do you guys have questions? So I'm going to record. Okay, I'm already recording this. I'm going to send it to. I'm going to post it on YouTube because I noticed that the group chat we always have messages and many people don't get access to the video. So I'll post it there and then send a link to the group chat. All right. Any questions? Oh, you can talk freely. Are you guys shy? Okay. So in absence of no questions, I will. Okay. I'll see you guys next time then. All right.
All right. Thank you very much.
Okay.
Bye.
Okay. Bye. Rejoice. All right. Bye. Thank you.